Today, we'll be discussing why Pinduoduo is a better buy than its competitors Alibaba, JD.com, and even Amazon. With a business model that combines the best of both Alibaba's and Amazon's strengths, Pinduoduo has quickly risen to become one of the most exciting companies in the e-commerce space. But what really sets Pinduoduo apart is its US business, TEMU, which has the potential to transform the company's growth trajectory. Despite only launching in the US in September, the e-commerce app TEMU has made a big splash by becoming the youngest company ever to advertise during the Super Bowl. In fact, TEMU's ad was the second most colorful during the game, making it a memorable and impactful addition to the advertising lineup. According to a survey, almost 20% of respondents indicated that they were much more likely to purchase the brand's products or services after seeing the commercial. What's interesting is that TEMU is actually owned by the Chinese e-commerce giant Pinduoduo, with a stock code of PDD. On September 1, 2022, PDD launched its to-consumer overseas e-commerce business, TEMU, which stands for Team Up, Price Down. Essentially, the business buys merchandise from suppliers in China and sells it directly to customers in the US. Simplifying merchants' work by taking over full ownership of goods right after they leave merchants' factories or warehouses. TEMU handles all logistics, marketing, and after-sales services. Since its launch, TEMU has gained attention from US shoppers and global investors alike, thanks to its aggressively low pricing and heavy promotions. This has prompted questions about how big and how fast TEMU can grow, as well as its long-term contribution to PDD. However, there are also concerns about the potential for steep losses in 4Q22 and over the next couple of years. According to statistics, TEMU's downloads skyrocketed by 45% on the day of the Super Bowl, and its daily active users also increased by 20%. As of the end of February, TEMU's monthly active users, MAU, had reached 13.4 million. Actually, back in November and December, TEMU was one of the most downloaded apps in the US. In fact, Data.ai, a market tracker, reported that TEMU was the most downloaded free iOS app in the US since mid-February. These impressive download numbers suggest that TEMU is rapidly gaining popularity among US consumers. This in a way reflects the subtle changes in consumer attitudes under the high inflation pressure after the epidemic. According to data in 2022 US Consumer Trend Report, 49% of Americans choose to be cautious in their spending. Against this backdrop, Americans' interest in low-priced products is increasing. So what does TEMU sell? Instead of asking what TEMU sells, it might be more appropriate to ask what it doesn't sell. With TEMU's website and app, all types of goods are eye-catching, including running shoes for $17.48, a universal wrench for $4.48, and a talking hamster for $6.99. Their banners boast products with up to 90% off retail prices during their Chinese New Year clearance sale. The vast selection of products and low prices are remarkable, making it seem like a virtual dollar store. Currently, TEMU mainly sells groceries, which are basically non-branded products exported from China to overseas markets. Local products that do not require importing into the US, such as food, are not included. The purpose of TEMU is to serve as an integrated supplier of Chinese goods shipped overseas. Once established, businesses can occupy the profit chain on the front end, rather than handing over all the profits to companies like Amazon and Walmart. As investors evaluate TEMU's potential for success, one critical question is whether Pinduoduo's lightweight platform strategy can be applied to overseas markets. This approach has been highly effective in China, but can TEMU replicate that success in the US? One potential advantage is the differences in the way Amazon operates. Their large self-built logistics system and profit requirements have led to higher commissions and restrictions on sellers. This has resulted in higher prices for similar Chinese-made products compared to TEMU's offerings. Furthermore, the decline in global logistics prices following the pandemic presents a favorable environment for TEMU's expansion. While this segment is not critical to the entire fulfillment process, the competitive landscape provides an opportunity for Pinduoduo to gain an advantage. If TEMU can successfully roll out end-to-end services in the US, Pinduoduo's logistics disadvantage may have a chance to narrow. However, investors must also consider the potential for steep losses in the short term as TEMU seeks to establish a foothold in the competitive U.S. market. According to research, the U.S. e-commerce market is expected to reach a retail value of $1,255 billion in 2026, with a compound annual growth rate of 9.8% from 2021 to 2026. While the market offers potential for new entrants, TEMU faces several challenges in gaining a foothold. These include competition from established players, high fulfillment expenses, steep user acquisition costs, and geopolitical risk. As a result, the company is expected to operate at a loss initially. Leveraging its experience in China, TEMU is pursuing a super low price strategy, which should appeal to price-sensitive consumers and bargain shoppers. With internet penetration in the US at 87%, higher than in China, and a significant population of households with lower median incomes, TEMU could potentially garner up to 100 million users or one-third of the total US internet-using population. While operating losses are expected to be contained at $1.3-1.9 billion from 2023 to 2025, TEMU is eyeing potential break-even in 2026. As TEMU establishes itself in the U.S. market, PDD may also consider expanding into other markets and formats. As TEMU aims to break even, current estimated logistics expenses of $12 to $13 per parcel present a challenge. However, we believe the company could manage to lower these costs to below $10 within the next few years through potential operational improvements in air shipments and other arrangements. At present, TEMU ships all orders by air, regardless of product size, weight, or bulk, using chartered plane contracts. However, this method may not be economical for bulky, low-density cargo, occupying significant cargo space. One logistics service provider suggests using chartered airplanes only for high-density cargo shipments and pallet contracts for low-density cargo to reduce costs. Such a shift could potentially lower shipping costs and accelerate TEMU's path to profitability. Additionally, as TEMU accumulates critical mass in its user base and collects consumer data, it could establish overseas warehouses to improve product transport efficiency and integrate the use of ocean freight for temporary storage. Although this model may incur additional logistics expenses, lower ocean freight costs would reduce overall logistics costs from the current 100% air freight model. PDD's business model is similar to Alibaba's Taobao, but with improvements that avoid its weaknesses. This has led to PDD's more lightweight structure and lack of other businesses dragging down its performance, resulting in market share gains. As consumer preferences for value for money have increased in the current macro environment, PDD's revenue and profit margins have risen, leading to quarterly profits in the billions. However, the gross profit comparison between PDD and Alibaba is interesting, with PDD's being only one-third that of Alibaba's despite its rapidly increasing market share. The difference in scale between the two is around 2.5 to 3 times that of PDD. TEMU has announced plans to expand into Australia and New Zealand on March 13. Previously launched products in North America will also be available in these markets. Additionally, PDD continues to expand its supplier network by offering incentives such as zero commissions and zero deposits to attract high-quality factories and small and medium-sized enterprises. Additionally, TEMU announced its launch in Canada just last February, and now, less than a month later, it has further expanded into the Australian and New Zealand markets, showcasing PDD's impressive overseas expansion speed. The growing number of orders, GMV, and user base in the US after its launch is the foundation for PDD's accelerating expansion. Pinduoduo's growth potential is unmatched in the e-commerce space, which overall is lacking new growth drivers. Its TEMU business has already shown impressive success in the US market and is poised for even greater expansion in the coming years. With its innovative low-cost strategy and focus on customer value, Pinduoduo has positioned itself as a better buy than competitors like Alibaba, JD.com, and Amazon. As investors, it's important to recognize the shifting trends in consumer behavior and seize the opportunities presented by companies like Pinduoduo. So keep an eye on this e-commerce disruptor and don't miss out on its potential for long-term growth. Thank you for watching and happy investing.